All right, everybody. Thank you and welcome to today's webinar, Things Your CFO Can't Overlook, Moving to a Usage-Based Economy. I am Inga Borman, VP of Marketing with BluLogix, and I will be your moderator today. Today we'll be covering three major areas, leaving time for questions and answers at the end. Three areas are key challenges, complexity and agility and why it's important, and of course, the top 5 areas that your CFO cannot overlook. Today's presenters are veterans in the fintech industry. Tim Cook is the founder, chief customer and strategy officer, and co-founder of BluLogix. He's a deep industry background in subscription models in the telecom and other complex industries, has worked with over 150 clients to monetize and operationalize their subscription management and billing platforms, particularly on complex channel sales networks, product catalog, pricing structures, and revenue recognition projects. Brent Reeves is a longtime expert in the tax space, having founded and scaled multiple companies in the tax automation field. Through his experience, he really recognized that existing solutions designed for complex industries and large enterprises led to slow performance, frequent downtime, and costly maintenance. He's the co-founder of Ceretax, an enterprise-level tax automation platform with best-in-class flexibility, speed, security, and customer support. And today, Fortune 500 companies are amongst the many companies who depend on Ceretax to automate their complex tax requirements. All right, over to you, Brent.
Hey, well, thanks, Inga. As Inga mentioned, my name is Brent Reeves. I am co-founder of Ceretax. Ceretax is the newest, most advanced tax calculation reporting platform to serve the usage-based economy. Today, we're here, obviously, as a sponsor and a proud partner of the BluLogix platform. The Ceretax platform is fully integrated into BluLogix, and the way our solution works is we're here to automate and instantly present every tax fee or surcharge for whatever services, whether it be communications, platform as a service, software as a service, IoT, whatever services you have, we're here to automate and facilitate the billing of those solutions for taxes, again, fees and surcharges, and that's at all levels, federal, state, and local. On the back end of that, Ceretax keeps all of that data in storage, so that if you're ever audited, you have complete transparency into why an item was taxed, how an item was taxed, so that you can defend yourself in case of an audit. Today, however, the real focus of today's webinar is to focus on the challenges a CFO faces with the billing and monetization as they move into the usage-based economy. And this really fits into Tim's wheelhouse. So I'm really going to turn it over to Tim for the vast majority of the webinar presentation, and I'm going to save just a couple minutes at the end to talk about just kind of some of the key factors that we're seeing within the tax side of things, things you need to be aware of, and things that may impact you that you may not be dealing with today. So with that, I'm going to hand it over to Tim.
Thanks, Brent. So my name is Tim Cook. I'm co-founder of BluLogix. And today I'm going to be talking about, focusing mostly on topics that a CFO might be interested in when it relates to consumption or usage-based billing. The first thing that to determine really is, do you need a billing and tax automation solution at all? In many cases, you don't. Not every customer or company needs to have a billing and tax automation solution. There are really 3 measures that we look at to make that determination. I'll be covering 2 of them. So the first one is volume. That's the one I'm not going to cover in detail, but in general, volume it should be around. If volume is the reason you're moving to billing and automation, that volume would be around 30,000 invoices a month. If it's significantly less than that, then volume may not be your criteria, but complexity may, and so may agility. So not all of these things have to be considered, but one of the reasons might be volume. The other might be complexity. So I'll talk a little bit about complexity. So there really are 5 areas that I'm going to touch on here related to complexity. Inga, if you'll advance the slide, please. So the first is product complexity. This describes the various capabilities of a standalone product, a fixed subscription or complex suite of independent components of software and services. The sale of kitchen knives, for example, through an e-commerce portal might represent the low end of product complexity spectrum, while the high end of the product complexity spectrum might include a programmatic relationship to deliver and manage a fleet of commercial aircraft over many years. So you can kind of see the kind of different ends of the spectrum. The next one is pricing complexity. So yeah, the number of different price models and attributes that require support now and in the near or midterm future, might be simple subscriptions, usage, or other metered approaches, outcome-based pricing, etc. Then there's billing attribute complexity. How many billing and metering attributes need to be supported for prepaid versus postpaid, for volume purchasing agreements, commitments, peak versus off-peak pricing, etc. There's regulatory compliance. So this describes payment, tax, privacy, security mandates that need to be reported on. PCI compliance might be an example. And there's geographic complexity. So how billing differs, from one country to another to purchase, deliver, and then what kind of payments might need to be, managed in other countries, to how they're managed to eliminate revenue leakage, and VAT and other tax compliance issues related to globalization. So these are very complex challenges that really require additional resources that an ERP may not have. So if you'll move to the next slide, please. The other of the three, so we have volume, complexity, is agility. So another reason you may look at a billing automation solution, billing and tax automation solution, is business agility, which describes the flexibility to quickly configure and test new pricing mechanisms and introduce changes as dictated by market conditions. So a lack of agility results in long launch cycles, and some may be experiencing this difficulty or inability to introduce new pricing mechanisms within a window of opportunity. And often translates into loss of market share and significant competitive disadvantage. Business agility can be measured, or billing agility can be measured as a composite really of three primary dimensions: business agility, IT agility, and product agility. So business agility describes factors such as abstraction of pricing models and business rules, corporate hierarchies, multi-tier discounting models, multi-bucket pricing models, and the ability to mix and match subscription, volume, and usage pricing. The most agile systems tend to be well-defined, object-oriented infrastructure with an extensible data model and configurable user interfaces that facilitate change. Then there's IT agility, which is the ability to, which can be measured by evaluating the time, cost, and resources needed to enable IT activities such as installation, customization, configuration, testing, deployment, monitoring, ongoing maintenance, upgrades, and market rollout. And then there's product agility, which refers to the speed at which a given solution can respond to technical changes such as user experience, mobility, cloud, big data, and protection from expensive upgrade cycles and unforeseen costs. Product agility can be measured by evaluating factors such as frequency of product enhancements, percentage of users on the latest release, product spread, etc. So if we cross over and do a kind of a 2x2 on complexity and agility, Inga, if you'll move to the next slide, please. We'll see kind of what the industry looks like according to MGI, and MGI does a really good job as an analyst and research organization, covering the what they call the agile monetization space. So you can see here that BluLogix, of course, is up on the far right, top right, but it doesn't mean that we're better than the other solutions. It only means that we're better at handling complexity and agility. And so that's kind of where we're there. You may not need that. You may not need the level of complexity and agility that we provide. You may have very simple subscriptions, and it's just not necessary to have, the horsepower, that a platform like ours has in order to meet more simple requirements. So, next slide, please. Again. So to that, that being said, when selecting a billing solution, the key rule to remember is that one size does not fit all. So, when evaluating a billing platform, to meet your needs, it's important to understand that they're all very different. And, many are, built for specific use cases. So really it's doing your homework on what the market, what's on the market out there that best aligns with your needs is necessary in order to end up with the right product. Next slide. So, with this CFOs in mind, CFOs kind of live in ERP and accounting platforms, and a billing solution really should be considered an extension of those systems, and not to replace those systems in any way, but just to extend the ability, the capabilities of an ERP platform that's built for one thing, primarily accounting, gap-based accounting, to be able to do, high scale, complex, agile, billing automation and tax automation. So next slide, please. So how do these systems work together? How do billing platforms and ERP and accounting solutions work together? Well, the first thing to understand is that a billing platform is typically, a gap-based, double entry, accrual, financial system with a very sophisticated GL structure. So you're dealing with the same structure, structured finance, technology in a billing solution as you are in an ERP. Billing platforms are able to capture more charging detail and are better equipped to report on those charges and manage payments against them. So typically that's a function of the billing platform. All transactions within a billing platform are associated to a GL. So invoices, adjustments, taxes, rev rec, whatever it might be, and this GL structure that exists in a billing solution can easily map back into or map to the ERP GL structure, chart of accounts, and this can be done via API or simple flat file exchange. Next slide. So one way to kind of begin to think about billing platforms is, to think in terms of a charging engine that sends data to an invoice or billing engine. And that's very different than how ERP platforms work or how companies maybe traditionally did business. So traditionally, one-time transactions followed a relatively simple charging process. Right, a quote was created with one-time charges. You would receive a purchase order with one-time charges. You would generate a sales order with one-time charges, and you'd invoice the customer one time. And if the same transaction happened again the next month, you'd do it all over again. So that's very different than than a subscription or recurring revenue billing platform process. The charging process with a billing platform is quite different in that the charges for the same product may occur on some frequency, right? So the same product, but bill it monthly, bill it annually, bill it quarterly. Charges can fluctuate based on usage or consumption. Could be different every month. A contract period does not dictate the charging frequency. So an annual contract could be billed monthly, could be billed quarterly, bi-monthly, whatever. So those two are decoupled. Charges can occur in advance or arrears, or any kind, or a combination of the two. So it might be a bundle product. One product in the bundle is charged in advance, the other one's charged in arrears. Typically, products that are charged in arrears are usage products, right? That makes sense. So charges are typically associated with a fixed billing period. So often the first of the month. You can have multiple billing periods, and then when orders are created in the middle of the billing period or transactions occur, in the middle of the billing period, those transactions are prorated to the end of the billing period. And oftentimes, if you're billing in advance, that first invoice you send out is a combination of the prorated period plus the next month in advance. And oftentimes, the charges are different based on volume, based on tiers, or maybe different discount schemes. So all of all of this charging logic, this complex charging logic, really kind of sits outside of most ERP platforms. So then the invoicing, subscription invoicing, as opposed to charging, really just reports on the charges for each completed billing period and manages the payments and balances against those charges. So those two logics are separated, and really it's the only way to manage complex charging rules. The only way to manage them is really kind of to decouple them away from the invoicing process, because the invoicing process is pretty rigid. So you have to decouple charging and invoicing, and this is something that ERP solutions really struggle with, because most of them are built to support that sales order, purchase order, invoice process, one-time billing process. Next slide, please. So one major component of a billing platform is the product catalog. Typically, your billing platform is your source of truth for your product catalog, because the billing platform is built to manage so many more attributes and rules, related to charging. So product attributes in particular are challenging for many platforms, because you're really managing an inventory of some type of a numeric code. It could be a license ID, a MAC address, SIM-IMEI, DID, something to associate to that product when it's purchased, so that I know who's using what product. And the reason that's important is not only from an inventory standpoint, so I know who's using what, but also from a usage standpoint. If I'm going to measure the usage of a particular device, I need to know how to be able to associate that usage to that device. So product attribute management is really important part of the product catalog function. Again, it manages the charging rules, proration, refunds. Proration and refunds oftentimes work together in an upgrade scenario where I may be upgrading from a silver plan to a gold plan. Essentially what happens is when I do the upgrade, I'm refunding the balance of the period for the gold plan and prorating the balance of the period for refunding the balance of the silver plan and prorating the forward balance for the gold plan, and that process kind of needs to take place, automatically behind the scenes. And then, all of the tax categorization happens in the product catalog as well. So product catalog is really an important part of the system. Next slide, please. And what is tightly coupled with the product catalog is our price plans. So while the product catalog manages product charging attributes and rules, price plans manage monetary value, cost, and dependencies for pricing. So pricing rules. So separating products from pricing allows you to structure your product catalog where you don't have to create a product every time you want to have a different type of, every time you want to price that product differently. So I can create a product one time, and then I can add that product to a price plan, and then I can price that product based on monthly, annual, prepaid. I can have all the pricing attributes defined in the price plan level. That way I'm not, if I have 5 of those kind of different combinations, I'm not having to create 5 of the same products in, kind of different versions. So price plans are important for the managed multi-currency. So every currency has its own price plan. Price plans are important for things like government contracts, where the pricing is really tightly defined. It's also important to be able to manage what groups of customers are able to buy what products. It drives your e-commerce. There's a lot of things that price plans are used for, and they're another really important component of a billing platform. Again, ERP solutions typically aren't managing price plans. Next slide, please. So often contracts are required that dictate, some term of a subscription. And if customers add product to an existing contract, they often want to co-terminate that with contract term. So this is a common challenge that without contract management would be difficult, where if I have a company I'm doing business with and they have users that are buying subscriptions one after another, and they're all 12-month subscriptions, managing the renewal on the other end of that is a nightmare, because now I have these 12 months that are extended almost maybe daily or weekly out for it is very difficult for me to negotiate a renewal. Whereas if I co-terminate everything, now I can say, okay, hey, look, looks like we have 1,000 users, everybody's going to terminate in December. Let's talk about an enterprise discount plan. Maybe we can commit you to 1,500 users next year, see what we can do for that. So it gives you a whole lot of opportunity for for upselling and really driving that revenue up. And then once you kind of have that contract in place, then renewals become very easy, because you can drive notifications to the customer, notifications to the sales team. You can manage quoting on renewals. In addition to that, you have things like rules like termination penalties. If I terminate, is there a percentage that's applied? Is it penalty, or is it the full amount? Do things auto renew? How long do they auto renew for? Is it month to month? Is it annual? Are there documents associated with the contract, SLAs, user agreements, and so forth? So contract management is a really important part of the billing solution process. Next slide, please. So if you're not familiar with the term CPQ, it means configure, price, quote. But I like to say that most of the solutions out there really are just Q. There are a lot of standalone CPQ solutions on the market today. Most can only quote. There's no way to create a sophisticated product catalog that reflects complex charging rules in a CPQ solution. It just doesn't exist. They lack the ability to create product relationships and hierarchy, and therefore lack sophisticated configuration logic and pricing logic. So the other thing that they lack is really because they're just focused on quoting. They lack the ability to have a tightly coupled quote to order automation process, and to ensure that there is no gap between what is being quoted and what is being ordered. And because these kind of tend to be siloed, what ends up happening is that the quote comes over with products and pricing rules that just don't align with how things need to be ordered or charged. So these kind of little islands that sit out there are really disruptive to automating a full quote to cash process. So that's a little bit on CPQ. It's an important part of the process, and it's important that whatever is being done from a CPQ standpoint can integrate into things like Salesforce and CRM, because that also is an important part of in managing the opportunities through the pipeline and so forth. So So having some integration at the CRM level for CPQ is important. Next slide, please. So the title of this webinar really kind of ties to usage and consumption charging. So this is kind of the last of the 5 points that I wanted to make. But consumption usage or consumption charging is really a very powerful method to drive your average product up, the revenue of your products up. Typically, consumption is based around some type of what we call a free measure, but an example would be if I sell you a 10 gigabit plan, I'm gonna rate the usage. I have to measure the usage against that 10 gigabit plan, and I'm gonna rate it at $0 per gigabit, up to 10 gigabits. But when it exceeds 10 gigabits, I still need to be measuring the usage so that I know now I'm going to charge you $10 for every gigabit you go over. It could apply to anything. It could be to licenses. It could be, if it's telecom, it could be, calling. It could be, pretty much, it could be even products for product-led growth. If this bundle comes with these products, and if you use, we're going to give you the ability to add other products, and if you do, we're going to move you up to the next bundle. So, there's a lot of things that usage and consumption gives you to be able to drive your revenues up. It's also a huge competitive advantage against folks your competitors that aren't doing it, because customers are typically going to look at that as, look, I just want to pay for what I use. Well, it makes a lot of sense. And so most people are kind of more aligned to the pay-as-you-go type model versus having to pay for something in advance that you may or may not use. There's the ability to measure usage based on tiers. So depending on how much you use, I can automate kind of how much I charge you. One of the most difficult pieces of this, of doing this, is consuming the usage data. Oftentimes that data comes from third-party systems that you may not even control. So getting that data and then having a mediation engine, what's what we call a data mediation engine, which is able to take all of these different sources of data in different formats and different structures. Some could be APIs, some could be flat files, some could be Excel spreadsheets. We taking all those in and normalizing them using business rules, mediation rules, and normalize them into a single set of usage data to then be consumed for billing and rating. That process is hard, and without a mediation engine is probably impossible to do without, with more than just maybe one data source. And we have some of our customers that have 35 data sources, and these data sources might even combine into a single product. 2 or 3 data sources might combine into what on the invoice is just a single product. So a lot of power behind usage and consumption billing, and it's probably why there's so much buzz in our industry anyway around it. So next slide, please. So in summary, when evaluating billing solutions, it's important to clearly define complexity, your complexity, as it relates to the product, your product. How complex is your product? We talked a little bit about that at the beginning. How complex is your pricing? What are the attributes you want to measure? How many of them are relevant to determining the end price that the customer gets? Regulatory compliance, we talked a little bit about that in geography or globalization. And then defining the requirements for business, IT, and product agility. How quickly is your industry evolving? How quickly is your business evolving? And then, what requirements does that drive? And then, and then taking that complexity and agility that you've defined, if volume is part of that as well, you may want to include that, and kind of recasting that in specific use cases is really important, because it's not just about the features and functionality, it's about automating the process, automating that, for lack of a better word, quote, the cash process. So the use cases are really important to capture the process. And then understand the billing solution functional components needed to support that use case. And look at the ability to extend functionality of into your own proprietary processes using APIs, SDKs, or low-code, no-code development environments. So you have to, how you're doing business today is going to be very different, or somewhat different, from how you're going to be doing business 3 years from now. And this is not an investment you want to make and change in next year. It really have to look at this in at least a minimum of a 3-year kind of investment, and so you have to have some flexibility to be able to grow within the platform without having to be restricted in just what the platform can do or just what the UI can support. Next slide, please. So again, my name's Tim Cook with BluLogix. We founded BluLogix really to be to extend complex billing solutions to the enterprise market, or mid-enterprise market. We have well over 100 customers today. We're in multiple countries. We're recognized by the top analysts from Gartner to Forrester to MGI. We're SOC 1, Type 1, Type 2, SOC 2, Type 2. All the enterprise creds that you would expect. And if there's anything that I can help you with, I'm always happy to have conversations. I'm passionate about the subject and feel like I can maybe pass on some of my knowledge and experience to others, if nothing other than just to help people. So that's it for me.
Thanks, Tim. Obviously, as I said earlier today, we wanted to focus primarily on the billing and the usage-based economy, a lot of the challenges that you're going to see there. But just as a takeaway, as a sponsor, I did want to kind of leave you with some of the things that we deal with as far as tax is concerned. As Tim mentioned, the biggest value add with a solution like Tim's is just being able to manage all of that complexity. Well, when you have to manage all that complexity, that parlays also into the tax side of things, meaning your tax engine also has to be able to handle that same sort of complexity and have that same sort of agility to change. So that's everything from adding new products and services, right? So today maybe you're a software as a service platform. But then tomorrow you add a communication service, whether it's data or IoT or voice over IP, and you have to migrate now then to being able to collect, remit communication services taxes. So it's federal universal service fund charges and whatever. You have to be able to change on the fly to be able to do that without having to replace or reconfigure an entire billing engine. And also a tax engine. So that goes along with what Tim was saying earlier, just a couple slides ago, around just having an environment where you can make those changes in a no-code or low-code environment. So the way the Ceretax solution is built is on a complex rules engine, and within the solution we have the content and the taxability research that supports, again, communication, software as a service, numerous different industries, all within one platform. So if you do add products or services at a later date, you are able to configure those, again, in a low-code, no-code environment in order to be able to immediately spin those products and services up for sales. Because the last thing you want to do is to lose opportunities or put yourself at risk, for that matter, by selling products or services before you have a tax policy in place, and then find yourself going backwards and going, okay, wait a minute, I've been doing this now for a little while, and I just realized now I have some obligations that I haven't been fulfilling properly. How do I do that without upsetting the government, or B, putting myself in a very, large liability situation, or, or C, even worse, disrupting all of my customers because suddenly they see taxes that they didn't see, a month ago, and we have to explain why that is. So being able to do that is obviously a huge area. One other area I wanted to mention on, because, again, Tim spoke so much about agility, is around bundles, right? So almost every customer that we see has some sort of bundled application, whether it's, a bundle of communication data and maybe hardware and software products and things like that, that they put together for, in a competitive pricing model. Well, what you don't know sometimes, and if you don't have a good complex tax engine behind you, as well as tax people behind you to be able to help you with this, is that the way you package those bundles and the way you configure those bundles could adjust the taxation significantly. So, maybe you have like a 4-item bundle within it, and every item should be taxed as what that item is taxable, right? Voice is highly taxable, whereas data is not. Software as a service, in some places is taxable, some places is not. However, if you bundle them up together and you don't have a true complex way of tearing apart those bundles and being able to defend those in under audit, the way you represent those bundles could cause what we call a contamination effect, which means that something that wasn't taxable within the bundle is suddenly taxable within the bundle because of the way you configured the bundle. So that's one of the things we deal with a lot, and one of the things that we guide our customers through. Another item again is exemptions. Tim didn't talk too much about this during the presentation, but exemptions is a huge area. What we see a lot of times with customers is, they're selling B2B, they're selling, obviously to large corporates who are tax exempt. Well, they may or may not be tax exempt from everything, especially when you're talking about communication services, right? So within communication services, for instance, you may be exempt, or that customer of yours might be exempt for sales tax, but they're not exempt in certain states for, universal service fund charges, or cost recovery fees, or 911 fees, right-of-way fees, franchise fees, all these types of things that require special exemptions and additional exemption certificates. So that's something that also a tax agent has to be able to recognize is, okay, we're going to apply this exemption to this particular customer. However, that exemption that we have, that we've received from this customer, doesn't apply to these 4 other taxes, fees, or surcharges. So therefore, we either need to go back and get those exemptions, exemption certificates, or proof that they are exempt from those, or we need to apply those taxes, fees, and surcharges to that product or service. And then, of course, lastly on this slide is flexibility, and that's just everything. And that's, as Tim said, you may have prepaid solutions as well as postpaid solutions. You may have recurring charges as well as non-recurring charges. All of those things have different taxability. Recurring charges that are, bundled, that include, a DID, some hardware, some other things, those are going to have a much different taxation than the usage side of the products from a taxation. And you might be billing the bundled solution up front, but then the usage-based on the back end. And you need to have the flexibility to know, and your tax engine needs to have flexibility to know, okay, we need to back the taxes out of these, apply different taxes, demarcate or decrement rather the taxes from the usage-based pricing, so that all of that can be represented properly. And at the end of the day, go, wait a minute, we didn't cover enough of our liabilities from the taxing through our pricing model. So those are just a few of the examples of what we mean, again, by flexibility and agility, both within the billing platform as within the taxing platform as well. And that's why we're, obviously really proud to work with Tim and his group, because they understand this, they deal with this probably better than any, and we feel like we come along right beside them and give their customer the ability to make sure that they're addressing all of these needs at the same time, as opposed to addressing them from the billing solution and then going, uh-oh, we have a problem on the taxing solution. So those are just a few kind of key elements that I wanted to throw in at the end. Again, Tim, thank you for a tremendous amount of knowledge that you've expressed today, and we're here to answer any questions that panelists may have.
All right,
Yeah.
thank you both. That was really great information. We received a couple of questions, and I'm going to try and squeeze them in before we're up on time. But Tim, quick question, how do you easily consume data to allow you to do this usage-based billing?
Well, it's never easy. There is no easily necessarily. Yeah, as I mentioned, the mediation engine is key, but the rules have to be defined. So there is some knowledge that you have to have on how to configure the mediation engine and take. So for example, the rules that you are using to define the usage on the data that we're consuming, we need to know those rules in order to be able to make sure we translate that data properly within the system. So there's really two things that are needed: the technology, which is kind of the easy part, and then a good team of data engineers that know how to define the rules so that whenever we read that data, we're reading it the same way. And then the other piece of that is having the ability to see when exceptions occur or dropouts. So for some reason we got a mismatch in the data or something was wrong with the data, and being able to isolate those and just focus on specific areas where maybe the data load failed in one particular line or one particular transaction. And then also too, having the technology sophisticated enough to say, oh, well, when that happens, again, I just want to write a rule to say override the data that's already in the system, if that's the case, so that the rules can be defined along the way by the users to how to manage those exceptions. And then over time, the data gets cleaner and cleaner. These rules kind of begin to clean, you make that data migration process easier. But it's never easy on the onset. It's a lot of back and forth and testing. But it is until once you get clean data, oftentimes we're coming from very dirty data environments into our platform. Once the data is clean, then you really it opens up the door for a lot of other things as far as expanding the way that products are sold or consumed.
So it sounds like data staging or normalization is the key.
Yeah.
Okay. All right, so Brent, one quick question for you before we're up on time here. Can you go into a little bit more detail about how bundles affects taxation, particularly in IoT?
Yeah, so typically, you have a bundle charge, right? So your bundle may include like hardware as well as the IoT service, right? So the hardware is obviously going to be subject to sales tax. The IoT more than likely is not. IoT is probably not as big of a concern as it is when you cross over from IoT to IoT plus what's deemed a communication service, right? So and that's going to be defined upon how are you using those devices. Usually it's an example of a monitoring device of some kind, right? So what's coming back? How are you doing? Is there any communication back and forth that's going across that may trip that over into a voice over IP or any type of communication service that trips those types of those obligations? Typically, that's where we see the challenge. And what happens is maybe they bundle a whole solution up into these three components, but there was really no logic behind how they are done. Maybe they configured the solution once and then without really kind of basing it on a true value prop between those three elements. And then if you don't do that and you don't represent it properly on your invoicing as well, the fact that you now added a voice or a communications deemed service now makes the bundle items within the other transaction also subject to tax. So obviously if there's hardware involved, that sales tax could be applicable, assuming it's a non-exempt customer. is going to be applicable anyway. But then the data transmission or the data or the internet access or things of that nature within that bundle are suddenly taxable at the voice level or the communication service level, depending on what communication that is, not at the level that they are. So it's really important to be able to understand how to put those together appropriately, so you don't accidentally, so to speak, trip yourself into having more obligations than you should. I think that's, yeah.
And similarly with exemptions. There's another question about exemptions. Do they follow that same pattern?
Well, the exemptions the exemption struggles we see are a little bit different, and typically what we see is kind of like exempt one for all. I may have said that earlier, but it's where, okay, hey, this customer is exempt, and they go within their billing platform or their tax engine, and they just exempt, now boom, exempt customer. Well, reality is, like I said, especially if you're, communications, that does not necessarily exempt you from everything. So what you really need to be able to do, and what we do, is we have exemptions by form type, right? So we know within our solution that if someone is submitting a form, and I don't know all the form numbers, I'd have to go ask Moshi all that information here, but especially in this like state of New York, where they're to be exempt from most things, it could be 4 or 5 different exemption certificates. So that's a key factor to be able to know, okay, why am I applying this exemption? Do I have the proper forms for this exemption? And then have your solution drive that, right, as opposed to you trying to figure that out, because that's a critical thing. So all in all, I mean, the whole thing too is, your engine should be able to do a lot of these things, and you should be able to change on the fly, right? A lot, especially bundles. I mean, no one ever comes out with one bundle and then that's the way it is for the rest of their life, right? It's always changing price. It's always changing components. The customer's changing components, all those sorts of things. Well, your engine should be able to take whatever bundle information you have and always break those components apart, regardless of how often they change or what's in them, in order to be able to compute the correct taxation, as opposed to spending, $2,500 to go in and have someone configure a bundle every single time within your tax engine. And that's where kind of having a rules-based engine that we have changes kind of that methodology, whereas before you kind of have to go, oh, we have a new bundle, you need to submit it, have someone code it and put it in the engine, and okay, now that bundle's live, and then you change it again. It's just those are the kind of the flexibility and the quick adaptations that you need to be able to do. Otherwise, you're going to be spending a lot of time and a lot of money just to adapt to your customer demands.
All right, excellent. Okay, I want to wrap it up. We are a little bit over on time, but thank you for answering those questions. And as far as attendees, thank you for attending. And if you have any additional questions, don't hesitate to reach out to Brent or Tim. You'll be receiving the slides and a replay of this webinar sort of immediately after we wrap up here. So you can also submit questions there as well. So thank you very much. Thank you very much for Tim and Brent, and thank you for attending this webinar. All right, thank you.